Hi, I'm Patrick Tuttle, the real estate guy with Coldwell Banker Heritage and Legacy Management Services with your residential real estate report for the month of January 2023, and I'll be right back with the report. All right, so I'm back with the report, and don't forget that if you like this report, please share it with your friends and family and anybody that might be interested in the data, and if they need some assistance with interpreting the data and how it might affect either your home sale or theirs or purchase, have them give me a call. 915-588-1850 is my cell number. You can also subscribe to my YouTube channel and make sure that you like and share that as well. So now, on to our report. Here we go. So we're starting off with the resale report first. And what you can see is that we leveled off we started leveling off in November, went down a little bit in December and January, and it's really leveling off on the available inventory. We've got somewhere around 1.4 months of inventory in the overall market. Now, individual price ranges are going to vary, but overall, we still only have about a month and a half of inventory or less in most price ranges. Now, here's what it looks like specifically with regard to sales, and pending contracts are down 22.4% year over year. So we're continuing that downhill slide that we started several months ago, and many of our sellers are starting to take notice of that, and they're making some price adjustments. Many of the buyers are making the adjustments on their offers. They're coming in lower than list price. They're asking for concessions like closing costs and title policies, things that we weren't seeing a year ago when the interest rates were still in the 3s and 4s. Now, sales overall are down 27% year over year, and the average price continues to rise. We're at 2.7% increase. Our average price in January was $236,820. That's still a really big number here in El Paso, especially for the resale homes, and you'll be surprised when we get to the new homes report here in just a couple of minutes. Now, here's the thing, the only bragging right that I have in the entire report, the size of the resale homes actually went down. I predicted this a long time ago, probably a year ago, where I said, hey, as these prices go up, the size of the home is going to go down because of the affordability factor. And it finally has come through. I think this is the second month in a row, and we're at 1,779 square feet, and that would get you somewhere around a 3-bedroom, 2.5 bath, maybe a 4-bedroom with some smaller bedrooms in there, but it's probably a 3-2 is what you're looking at. Price per square foot continues to rise. We're up almost 10%, 9.7% year over year. We're at $134.39, and days on market is 58 compared to 51 last year, and that's probably going to continue to rise. Now, on to our new homes report. Now, this is where the deals are starting to be made because some of the builders are coming down on their prices because of the inventory. And what you'll see here is that the green line, it's also leveled off where the inventory has gotten real steady over the past 3 months, and the sales, look at that red line down here in the corner where it tanked. Well, it didn't tank completely. We're still selling homes, but we're not selling them as many as we did a year ago. So, pending contracts down 18.4%, down to 177 during the month of January. Sales down 11.2% from 152 to 135 closed transactions in January. That's not a huge surprise there. January is typically not the greatest month of the year because it's tough to finish the homes as we come through the holidays because many of the workers will just take time off and the builders will take time off as they spend time with their families for the holidays. Months of inventory up 15.7% year over year. 68.8% year over year. That's a huge increase in the availability of homes, and we're to the point now when we look at that 6.65% number of months of inventory, it's probably about half of that that's actually available to be delivered in the next 30 days. So somewhere around 3.5 months of inventory ready to be delivered to the marketplace in the next 30 days. And the others are in some stage of construction, but there's just too many homes out there to go out and gather that data. Average price continues to rise. We're at 15.7% on the closed transactions for the last month. We're at $305,759, and it's just challenging for us to look at a 3 in front of the average size home, which is at 1,936 square feet here in the El Paso marketplace. We just haven't seen prices like this sustained for the long term because of the economy and what the average people in El Paso can afford to spend on a home. It's just not in the 300,000 range for the majority of our population. So where are they coming from? All over. People that have seen that this 1,900 square foot home would cost $400,000 in a market like Phoenix, or $500,000 in LA or in Las Vegas or something like that. We are still a bargain market when it comes to those homes, and that's the reason why we're continuing to see the prices rise, because we've got outside money coming into El Paso. Price per square foot is up 11.7%. We're at $157.58 on average. That's what closed during the month of January, and days on market is at 248 compared to 144 last year. And that has to do with the builders that are listing their properties now when they just have a lot, vacant land, and they're projecting to build a house out there trying to get a pre-sale contract. So that's the report there. Now, when we look at the index returns compared to residential real estate, and this is what I want you to take a look at. In the S&P 500, the 1 month, they're up 6.18%. Now remember, I'm not an investment advisor, but when I look at my returns in the market versus my returns on my residential real estate, I believe residential real estate for the long term, that's where it's going to be, because we don't have the volatility as what the stock market had. The Dow Jones Industrial Average was at 2.83% increase month over month. That's just not that big, and because they took a tank at the beginning of the year of 2022, you just can't make that money up anytime soon. So I think long-term residential real estate makes a lot of sense because of the appreciation, and if you have it financed, somebody's going to be paying that mortgage for you instead of you paying it, and eventually the property is paid off and you've got all that equity that was built in there. Current mortgage rates, 6.468 on a conventional 30-year mortgage. That's the average across the United States, and it's going to vary depending on what your debt-to-income ratio is and what your credit score is. So don't take that to your lender and say, Pat said you could get this. Well, maybe you can, but they're going to look at your debt-to-income ratio. This is just the average of what we got 30-year mortgage. The trend is that it's showing 6.78% over here and 5.672 on a 15-year mortgage. 3 key takeaways for this month. Number one, market has slowed, has not stopped. We didn't hit the brakes that hard. Yes, the brakes were put on when the Fed started raising interest rates last March, but it has not stopped. We're still selling homes because people have life changes. People get married, they have job transfer, they get divorced, sometimes they pass away. Life happens, and that's what creates the transactions in the marketplace, is all of these life things. People having babies is another one, but so the market does not stop. Number two, we're seeing multiple offers in many price ranges, especially in the 300 and below price range, because there are a lot of buyers out there. And when you saw that the compression we had with the mortgage market, where a buyer in November of 2021 could buy at $300,000, they could only buy at $225,000 in November of 2022. So we're still seeing multiple offers in lower price ranges, and that's going to continue here in our marketplace until we get enough inventory out there for there to be enough buyers and sellers at the same time. Number three, new home prices appear to be coming down just a little bit as the inventory rises. Why is that? Well, the builders had a great opportunity to get some margin on the homes as the prices went up and we had less availability. But as we have more availability in the marketplace, they're giving the incentives to the buyer. They're paying more closing costs, they're giving landscaping allowances, they're giving decorating allowances and things like that. They're paying more commission dollars to the agents. They're trying to protect those prices in their neighborhood so that they can keep their appraisal values high, and that appears to be giving the buyers some flexibility with what they do with the builders out there. So that's our market report for this month. This month being February, looking at the January data. And again, if you've got questions about this information and how it affects you in your real estate transactions, give us a call here at Coldwell Banker Heritage at 915-585-7777. That's the office number, and we'll be happy to talk to you about how this affects you and how we can be of service to you. Thanks for watching. God bless you. Make it a great day. Bye-bye.